I spent years going in circles trying to become a consistently profitable trader. But when I threw everything out the window and focused on one simple strategy, it completely turned my trading around. Now, years later, it's given other struggling traders a complete 180 in their trading results. The biggest pitfall new traders fall into when they start trading is thinking you can master multiple strategies and patterns and become profitable with all of them. But this is what's probably holding you back from becoming consistently profitable. I found it way more profitable to focus on key areas of support and resistance in the market, which makes you focus on high probability areas, just like in this trade I took where I risked about $1,500 and made almost $5,000. With this strategy, I've been able to actually start with a small trading account, risking under $50 per trade, and grow it to this larger size where I'm making about $5,000 per trade. I did all this only trading 60 minutes a day. I open my charts up and look for a simple 4-step entry checklist we'll go over, and all I use to read the market is the candlesticks of the chart. Once you learn to master reading the candlesticks, you can read any chart or any time frame you want. Personally, I trade on the futures market because the leverage and simplicity it gives me. But you can trade this on any market or time frame you want. Now, the first thing that I do every day is I open up a 15-minute chart of whatever I'm looking to trade, and I look at just the key areas over the last couple days. What has the market been doing? Where are the major swings in the market? Because I want to be able to draw the key areas of support and resistance. So when the market comes up to one of those areas, I can look for a reversal off of that area. All I look for is reversal trades. I don't look for continuation trades because this has allowed me to simplify my trading. Anytime the market has a pullback into a clean area, I look for a reversal and take a nice trade off of that. What this does is it allows you to risk a small amount and have a high profit potential, which is huge when it comes to trading. Because when you can risk 1 to make 3 or 1 to make 4, you don't have to be right very often. You can be right 30 or 40% of the time and still make consistent money over the long run. That is the important part about this strategy. Now, for the next few steps of my trade entry checklist, let me go through a trade I took on gold and walk you through the steps and patterns I saw to enter in on a trade and what you should look for every time you're looking to take a reversal. And so first thing is, what I'm looking at is a key area of support or resistance from a gold chart. And so the market has come up here and just bounced higher. And this pullback here, I think the market could come down here and potentially bounce. Overall, gold has been in a huge uptrend recently. And so trying to watch for the market to come down and then look for a reversal to the upside is very, very profitable because you're staying with the overall big trend. Even though I am looking for reversal trades, I like to stay with the bigger picture trend. Even though the short-term trend here is down because it's, making lower lows and lower highs here, what I'm looking for is that to potentially switch and start making higher highs and higher lows and getting in here, betting that the market's gonna go up and then getting out somewhere up here at the highs. You can make a good chunk of money just capturing that move. So my whole entry checklist, the whole idea of that is there are key things that identify when this short-term downtrend is over, and I think it's gonna reverse and continue with the broader uptrend. And this allows you to, again, get those sniper entries and risk a small amount and make a large amount. And so a big thing you'll notice immediately on my charts is these boxes. What they are called is fair value gaps. You can get these on almost any trading platform for free. The one I trade on and suggest getting for futures trading is called NinjaTrader. I'll leave a link for it in the description below, or you can get it via this QR code. But what these indicators do is it basically tells you when there's an unhealthy move in the market. And what I've noticed over time, I've looked at the charts for years, is when there's an unhealthy move and the market moves down so quickly, is it's likely to reverse that, just because the market likes to ebb and flow. It likes to have moves where it has pullbacks, before it continues in the direction of the trend it's going. And if it doesn't really have that and it moves too quickly, well, it's likely to snap back. A quick example here is, well, we have, even here, we had a very big unhealthy move in gold earlier in the day. And so you can see it made all these green boxes saying that there was an unhealthy move. Even just looking at the candlesticks here, you can see it's just one directional. All it does is go up. And then eventually it goes sideways, loses that upwards momentum, and it gives all of that move back up. And so this would have been a nice reversal trade. It didn't set up how I like, but that's the idea with the fair value gaps is you have a big move up and it's likely to reverse that. That's what these boxes tell you. So that's a really nice indicator for a potential long here, is that there's a lot of red boxes saying that, well, this market's overextended to the downside. It's likely to have a move up. And so that's all I use that for, is it helps me easily identify, okay, there's a good potential for a move to the upside. And then the last thing is just making sure that that downtrend, the short one, is reversing. So the way I do that a lot of time is either using a downtrend or looking at the swings in the market. When is it going from making lower lows and lower highs to now making higher highs and higher lows? And so with this gold trade right here, you can see it's broken that downtrend. And then all I'm looking for is a potential pullback to happen. Just to zoom forwards a little bit in this recording, is I want to see it essentially pull back and make a head and shoulders, and then I can look for a long to the upside. And you can see I have a little risk reward here, tool here that tells me, okay, if I'm gonna risk about $1,600, I go for about 3 times my risk on average, and then it'll kind of move up from there. And so from there, to enter in long, the last thing I look for is a big bullish candlestick when I'm looking for longs to show me strength coming in at these levels. And then I wanna see a break above that. And so you see I have a buy stop order. As soon as it breaks this level, I will jump in a trade and bet to the long side, looking for a clean move to the upside. So here, that order eventually fills. And just to kind of zoom through this, we'll go through some management in a second in the next trade, and also some key timings that I've realized over time and recently are extremely powerful for consistent daily trades. Now, with this trade, it took a long time to play out. Sometimes trades can take a long time. Other times they could be over and done in 10 minutes. But this one, just kind of moved up, and I eventually closed out, it got to about 2x profit. I was looking for about 3x, and it looked like it was gonna continue up there, but it eventually pulled back pretty hard, and I got out at about $2,200. And so it wasn't as big of a profit, but I was looking for just kind of a slow grind higher. And so just to show you another example here, I'm jumping in a trade actually now this time on the S&P 500 futures. You can trade this on the futures market, just the normal options or stocks for just trading the SPY. But to show you a timing that I've recently found out, the market opens up for me at 7:30, and then I trade for about 30 minutes and then look for these reversals in the morning, and I just trade for 30-60 minutes in the day, and I can capture these huge trades now because I've practiced and got larger size over time. Now, before we go into that timing, to quickly go through that checklist we had, you can see here I have a big picture support zone drawn off of a 15-minute chart. I always just go and look at a 15-minute chart, again, look for, okay, where are clear bounces on a 15-minute chart, draw a zone, and then coming into this, you can see the market opened here up at 7:30, right about here, had a big sell-off, big unhealthy move. On a 5-minute chart here, you can actually see I don't have the fair value gap indicator on, but it would be showing you those red lines right here. And so I'm looking for, okay, this is an unhealthy move on a 5-minute chart, and I'm gonna enter in on a 1-minute chart so I can get that really accurate entry and get in at the lows, but I'm expecting it to move all the way up here. And then after that, we have that downtrend. That downtrend is clearly broken right here. And then there is the swings of the market where it's making lower lows and lower highs. And then all of a sudden right here, you have a higher low. This is a really nice head and shoulders pattern. I've actually got a free candlestick pattern guide you can get in the description of this video or this QR code. It'll talk you through a lot more importance of how to use these patterns and some of my other favorite patterns to enter in on. Just to show you super quickly the entry candlestick here, I saw this pullback and I thought, okay, this is gonna make a head and shoulders pattern. If it breaks above this swing high, we're making a new swing high, and I entered in on a buy order. It was a buy market if touched technically, because the market broke above and then pulled back and hit me. And then I'm betting that the market's gonna pretty much go to the market open, and then maybe big picture, because I'm going with the bigger picture uptrend, looking at, a bigger picture chart is, well, if we break up here and continue higher, I could capture a really big trade on the day. And so from there, once I'm in on the trade, there's a few key important things to managing your trades. I like to fluidly do it as the market plays out. Depending on what the market does, I'll change a few different things that I do. But to give you some basic ideas, because I think when you're starting out trading, don't overcomplicate it with management. Do a couple things, because as the market plays out and you're in a trade, seeing the money go up and down and seeing the potential to pull back here, and then you're always going to think of the worst possible outcome, when in reality staying in a pullback like this is really important. Even though I went from being up $3,500 and now to down, losing that $1,500 and being only up $2,000, that's a lot to deal with. But being able to know and just follow your read and follow candlesticks is really, really important. Now, the last thing that I didn't talk about too is that timing in the market. I've noticed that either 15 minutes after the market opens or 30 minutes after the market opens, technically New York Standard Time, this would be 9:45 and 10 a.m. Eastern Standard Time. On my chart here, because I'm in just a different time zone, it shows up at 7:45 and 8 a.m. And so I like to draw, if I go back in the recording, before even the trade starts, I have these red lines drawn on my chart marking that 15 minutes and 30 minutes after the open. And then you can see pretty much exactly is the market bounced at that 15-minute close. That's where the bottom was put in. And so you can look at here at 7:45, 15 minutes after the market opened, that's pretty much where the market bottomed and put the bottom in for the morning. And so that's another key to looking for a reversal here. As we got to about here, I moved my stop to break even, because at some point you need to take the risk off the trade. There's no point in letting the market come all the way up here and then knock you out for a loss. You got to start eventually trailing up. But I like to try and have some kind of mental stop. In this trade, the market went so rapidly up in one direction. My thought was, okay, maybe we'll come to the market open. That's what this kind of box here is. And we'll reverse. And I'll just capture kind of a 2x trade, hopefully. Or we have a little pullback and continue and break higher, and I can capture maybe 3 or 4x if we continue to break and push the highs. And so just to kind of zoom through this, that's exactly kind of what happened. We had a little bit of a sluggish slowdown at the market open here, but then it eventually continued to break higher. And at this point I thought, okay, well, we're at a bigger picture resistance, and this is a big candlestick that pushed up fast. I'm happy closing out at 3x and kind of calling it for the day, because a big move like this is unhealthy and it's likely to switch and break off of that. And so if you want a more deeper explanation of this, check out this full scalping tutorial here, and make sure to get that candlestick pattern guide in the link in the description of this video, and get NinjaTrader if you're looking to practice this and trade futures.